what that's done is obscured what's going on in Europe right now. We got these 3 or 4 elections going on. You got election in Italy, France, Germany, the Netherlands, going on right now. And so, the euro and the European Union is in a very fragile situation.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with a distinguished guest. He's the president of First Mining Finance, a company that has been described as a mineral bank. And we are going to discuss their acquisitions, their exploration, and their overall strategy as we navigate through 2017. I have on the line none other than Patrick Donnelly, the president of First Mining Finance. Thanks for joining me today, sir.
Thanks for having me on, Kenneth.
First Mining Finance, was one of the only times, I think the only time I've ever come across the term mineral bank. And getting to know the company, it's really a powerful strategy, especially as precious metals have come off their highs, some, from the 2016 high. And please share with us the details on this company's strategy, specifically regarding the mineral bank.
Yeah, sure. Again, thanks for having me on, Kenneth. And it's a different business model. As you're well aware, our founder is a gentleman named Keith Neumeyer. And Keith has founded 2 other billion-dollar companies, first Majestic Silver, and first Quantum Minerals. And he founded those companies in severe bear markets. And in 2014, Keith was convinced that at the time, we were in one of the most severe bear markets in a couple of decades. And he felt it was a great opportunity to go out and acquire highly undervalued but high quality mineral assets. We were seeing historically low valuations. So the concept of the mineral bank is simply, we're seeing these, brutal markets, historically low valuations, and going out and acquiring as many high quality assets as possible and building out our resource base. Let me put it this way. My motto at the time was, it was cheaper to buy ounces than to drill for ounces. So in a short period of time, just over a year, we did 8 transactions. We added 12 assets. We built our resource base to 7 million ounces measured, indicated, 5 million ounces inferred, and we originally started from 0 ounces. We're at a point now where, since last summer, we've seen valuations come back up. We've seen some liquidity come back into the market. It's much tougher to do deals. We did, like I mentioned offline, we are doing some work at some of these properties right now to enhance them, generate some news flow, and demonstrate to the market these assets are high quality. Sure. We also want to advance these assets as much as possible. That being said, we're not going to put them into production. I'm a geologist. I'm not an engineer. Geologists aren't great at putting assets into production. But what we will do when we're further along in the gold cycle and we see valuations even higher, we'll do deals with other parties, other mining companies, private equity groups, and sell the assets to them. But we would hold on to residual interest in the form of royalty streams, joint ventures, spin-outs, or some combination of the above. And ultimately, these assets go into production, but we would have some exposure to the upside of these assets and eventually generate revenue.
Sure.
Pay dividends to shareholders. So that's kind of the general overview of what we're trying to do. And it's interesting because I was just in Florida last week at the BMO conference, the Bank of Montreal conference, mining conference, and it's like the who's who of mining. Like all the big shots are there. All the major mining companies are there. Guys like Frank Giestra were there, and some of the big wigs. And I met some of the big companies there, and they're eyeing our assets already. They like what we're doing, and they already want to do deals, but we're not ready for that. I think we need to be further along in the mining cycle.
Well, to be fair, First Mining Finance is really at the top of the list of mining stock performers, over the last year, however you want to look at it. It's done very, very well. It's now on the GDXJ. What do you attribute this to? I
think a number of things. One, I think, our chairman, as I mentioned before, his name is Keith Newmeyer. And one thing I've learned, Kenneth, before I came back into industry, I was a sell side analyst. And one thing I learned, when I was analyzing stocks, is that management is critical. I mean, obviously, that's a no-brainer in any sector. You need good management, of course. But I'll be honest with you, mining is a very risky sector. And because of that, there's only been a handful of successful people that have created wealth for their shareholders. And our founder, Keith Newmeyer, is one of them. So, I think a lot of it is attributed to the goodwill that Keith has. He's got a very good following in the retail crowd. And Keith has always delivered, and he's created a lot of wealth. And so that's created a lot of goodwill. Also, it's a different business model. We're very, very aggressive. We're not afraid to make deals. We're not afraid to go hostile. We're not afraid to shake things up. And I think the market was looking for that. And I think we got a lot of goodwill because of that as well. So, it's a combination of those things, having good people and also an innovative, creative business model that has the potential to generate considerable wealth for our shareholders.
You brought up the hostile takeover. Pat, if you would you just explain that, what that
Sure.
is, and how you guys went about doing that in a previous transaction?
Yeah, it was actually our first transaction. We got listed in April of 2015, almost 2 years ago. We raised $5 million. And our chief executive officer, Dr. Chris Osterman, had put together a list of potential targets based on the quality asset, number of ounces, jurisdiction. And at the top of the list was a company called Coastal Gold. And so unfortunately, just before we became public, they announced a deal to merge with a sister company that had common management. We approached Coastal Gold to do a deal, and they ignored us. And so we had to, shape things up a little bit. We had to go to the courts, we had to go to the Supreme Court of Ontario. We had to go to Ontario Securities Commission, and we had to push them around. And we went directly to the shareholders, and we said, hey, these guys have not generated any value for you. They pay themselves a lot of money. They've been messing around. Here's what we're doing. Here's our leadership team. This is Keith Newmeyer, and we put them in a headlock, and they succumbed to that, and so we took them out. So it was the best thing we ever did. It showed, because we were, when we were marketing the story and trying to get off the ground, we were outlining, what we're going to do, and people were like, yeah, everybody says that. And so we really needed to make a statement that we meant business and that we followed through on what we say. And to do that right out of the blocks was probably the best thing we ever did. And all the Coastal Gold shareholders, there's still a lot of them left, have been very, very happy with what we've done.
Yeah, and it's interesting the way you put that, how you've created goodwill because of that, being aggressive, being on the forefronts, and obviously Keith Newmeyer's success. And I actually wanted to go back to that for a moment here. You mentioned First Quantum Minerals and First Majestic Silver and their successful endeavors. How similar is the First Mining Finance strategy to the previous companies that you mentioned, First Quantum and First Majestic?
Yeah, it's an entirely different model. The commonality would be that, Keith identified a business model, for each company, he identified a business model that never been tried before in the mining sector. For example, First Quantum, he started that in the early 1990s, and the business model was, in those days, junior mining companies did not put assets into production. Keith said, I want to buy assets, and I want to buy producing assets or put them in production. People told me he was mad. He was also one of the first Canadians, or first Westerners, to go into Southern Africa and build and operate mines. He went into the Democratic Republic of Congo, which just came out of a dictatorship for 30 years. But the Congo has some of the richest and highest grade copper deposits in the world, and Keith and his team were the first ones in there. So again, it's something completely different than what the market was used to. First Majestic, Keith, was very bullish on silver, and he liked, and he also liked Mexico, and so Keith was one of the first, again, Westerners to go into Mexico and start buying assets. And the business model was focused exclusively on silver and focused exclusively on Mexico, which nobody had done before. There were people who focused on silver, but there were no North American companies that focused on Mexico. So again, they're the purest place silver producer in the world, focused on Mexico. And again, it was something that was different. The market likes stories that distinguish themselves in terms of their business model. And that's what he did with those two stories. And with First Mining, again, it was the mineral bank model that he conceived and that we've executed. And again, the market likes it because it's an interesting idea. It's a different way to generate value, and it's creative. And like I said, it's done well. So far, it's done very well.
Yeah, it sure has. Patrick, I want to ask you about mining shares. You mentioned the word market. Obviously, the mining sector, a lot of high risk, high reward scenarios. If you want to just have a more conservative bet, and many people believe that precious metals at these prices, it's really not a bet. I mean, it's they've come off so much from their 2011 highs. But when it comes to the underlying mining shares, the leveraged effect, and I just want to ask you, in terms of ups and downs and First Mining Finance positioned to handle the volatility, how do you feel like this company is more prepared to handle the market than, say, your average company out there?
That's a great question, Kenneth. When we started this company, one of our other mottos was that we built this company for a bear market. The reason we created it was to go out and acquire highly distressed junior mining companies. And people keep asking me, what if gold goes back down to $1,000? That's fine with me. We can withstand that. And matter of fact, if it went back down $1,000 again, we'd start pulling the trigger. We haven't done any deals since last June because we have seen valuations come back up, liquidity come back into the market. There's capital coming back in. We're seeing a little bit of volatility right now. But if the markets went back to where they were, $2,000, we'll pull the trigger. On the other hand, if gold goes, up to $1,400, $1,500, that's great too. And we'll raise money and we'll move our assets forward and de-risk them. And I think what a lot of people don't realize, all the major mining companies, they just spent 4 or 5 years trying to survive. We had really difficult gold prices for a stretch there, and all the major mining companies were over leveraged. They were carrying massive amounts of debt. So they've been spending the last 4 or 5 years, trying to drive down costs, which include exploration development costs and shedding assets. And now, for the most part, they've got a handle on their balance sheets, but they haven't thought about replacing the depleted reserves that they've used up over this 4 or 5 years. And on top of that, there hasn't been any major discoveries in 5 years. So I've met with a lot of mining companies lately on their instigation. And the message I keep getting is, we have to start thinking about replacing the depleted reserves. And we have to do that soon, because in the next few years, our production profiles are going to start to decline. And as I mentioned before, there hasn't been any major discoveries. So, whatever way the markets go, we're going to be sitting pretty. We're flexible. We move very fast. If there's a downturn, we can withstand it. If the market goes up, we'll take advantage of it. And that's, we're a nimble, flexible, yet aggressive company. And we can adjust quickly to market conditions.
Sure. And we've certainly seen that. Patrick, what do you think it's going to take to see valuations of the company to go to the next level? Is it simply the underlying metals rising, or is it the value that you guys are creating being realized by the market?
That's a great question. I think it's, to be honest with you, I think it simply is we need to put money into the ground. We need to de-risk these assets. So, for example, we got a $10 million budget this year, 50,000 meters of drilling. We need to advance these assets. We need to do some economic studies to show the market that these assets are economic. It's a show me market, and you gotta step up and show what you have. So I think for the next step is we got to show that these assets are viable, and viable not at a we keep telling people we don't need $2,000 gold, we don't need $1,500 gold. We believe the assets we do have would make money in the current price environment. But it's one thing to say it, another thing to show it. And right now, we're doing that. For example, at Goldland, we got 3 drills turning right now, and to convert the inferred resources into measured indicated. And once that's done, we'll do a new resource, and hopefully that'll lead to a preliminary economic assessment, which will be an economic study, and that'll show the market that this is a quality asset. So yeah, we're people keep there are people out there that say we don't know what you have, you got to show us, and we're say fine, that it's a show me market, and we're not afraid to do that. So we're gonna put money to the ground, we're gonna create value, and we're going to and that should move up the market view of our valuation.
Sure. And I know you said you're not worried about $1,000 gold because of your unique position and your amazing business strategy that you guys have been able to implement up until now. But what is your overall view on gold and silver, where they're at now? Where do you think they're going? And, maybe some reasons as to why.
I'm very bullish. I'm not one of these guys that think we're going to see $2,000 gold. I definitely see way more upside than downside. I see, within the next 2 years, I see gold, $13, $14, maybe even $1,500. And that's predicated on my view. We're going through, in history, we're going through a very volatile period in global history. We're seeing, governments and countries maxed out on debt. I don't think people seem to be, everybody talks about Donald Trump, but I think what that's done is obscured what's going on in Europe right now. We got at least 3 or 4 elections going on. You got election in Italy, France, Germany, the Netherlands, going on right now. And so, the euro and the European Union is in a very fragile situation. There's noise again about the Greek debt situation. That's been on the back burner. That's coming back up again. So, I was just in Europe about a month ago, and I was visiting some funds in Eastern Europe, and they're absolutely terrified. So I think we're going to see a lot of volatility out of Europe. You look at the rest of, the world, what's going on in Russia, what's going on in Asia, North Korea is getting a little bit shaky again. And you're seeing a lot of governments like Brazil struggling badly. And then you talk about the United States, where Donald Trump wants to keep spending, and yet the U.S. government has a massive debt. And people also forget, it's not just the U.S. government. You look at some of the states. The state of Illinois, has massive unfunded pension liabilities. You look at student loan debt in the United States. It's greater than credit card debt. These things aren't sustainable. And eventually it's going to catch up. And it doesn't have to be all these things happening at once. You look at Europe and unstable governments, very, very, high debt levels, aging populations. And then on top of that, you're seeing a change in demographics. You're seeing more people from the Middle East moving there. And you're seeing a conflict of cultures that's going on. So there's many, many things out there that, and I hate to say, I don't like talking about these things because it's kind of depressing, but, I've never seen anything, I've never seen so much volatility in the world. And I think that unfortunately, people need to have a haven to store their wealth, protect their wealth. And what is that haven? It's going to be gold. And so the fundamentals for gold are very good.
Well, I actually strongly agree with you there. Although I tend to think that, I think precious metals are going to go high, very high one of these days. I don't know when that exactly is going to be. But all those points I strongly agree with you with. Pat, when it comes to, you're just kind of your closing thoughts here on the company, what would you, like to leave our audience with before we say goodbye here?
Yeah, I think the main thing I want to leave is that, we're still going to look for deals. There's nothing imminent right now, but at the same time, we're going to have a lot of news flow coming out this year. We got 3 drills turning to Goldland. We're going to drill a Cameron. We're going to drill a Hope Brook. So there's going to be a lot of. We're going to do a PEA, preliminary economic assessment, redo the PEA at Springpole. We might do a couple more. We might have some more resource assessments. So there's going to be a lot of news flow this year. And again, we're at a stage where we need to show the market what we have. And we, like I said, I could talk all I want about it, but you really have to, show people. Actually put the money into the ground, show people what you have, and that's what we're doing right now. And so I think right now is a great entry point to get into the company because we got so much good news coming out. And I think, we're gonna get a re-rating once we show the markets the quality of these assets.
Well, very exciting. Patrick Donnelly, everyone, the president of First Mining Finance. Patrick, thanks again for coming on the show with me today.
Thanks a lot, Kenneth.